Good morning, everyone. Hello. I hope you are well this morning. Thank you so much for tuning in and joining me. This is my daily live coronavirus and UK business update. So thank you so much for tuning in. I am just going to make sure that I have loaded everywhere I need to the comments so that I can see what people are saying. Please do, if you are watching on the replay, give me a hashtag replay in the comments. If you are hopping on live, please do give me a hello. I would love to know that you are here. It is good for me to know that you are here. So please do give me a hello if you are tuning in so that I can say hello back to you. It's always nice to know that people are here. And let's just get the comments on this screen over there. There we go. I can see a number of people hopping on live. So I do appreciate that very, very much. Hello, Impressa. Thank you so much for joining me. Hello, Nikki. Hello. Thank you so much for tuning in. Hello, Mark. Thank you so much for hopping on. Hello, Susie. Hello, Daz. Thank you. We are streaming everywhere at the moment. We are on Facebook. We are on YouTube. We are on Instagram, TikTok, Periscope, Twitter. So we are all over the place. So do give me a hello, regardless of where you are watching. Hello, Rob. Thank you so much for tuning in with me today. So for those of you that don't know me, if you are new to my daily lives, this is the show where I am basically updating for UK businesses all around coronavirus and the impact and everything that's happening at the moment. My name is Annette Ferguson. I'm CEO of Annette & Co, UK-based accounting firm. I'm a chartered accountant and certified Profit First professional. My aim is to help business owners take home more money from their business for them and their families to enjoy. Of course, at the moment, that can be incredibly challenging for many, and I want to try and help support you through that by these daily lives, both just now and beyond as well. So I have a number of things that I want to go through today. As always, I have some notes written to make sure that I cover everything that I need to cover on today's session as well. So the first thing that I want to cover is I've had a lot of questions around how do we treat the furlough cash that we are receiving in for our employers or for our employees. How do we treat the furlough cash that we are receiving in for the claims that we've made for our employees' wages? What do we do with that from a tax perspective? So this income that you receive in to be paid out to your employees under furlough is treated as other income in your bookkeeping, in your accounts. It is treated as other income and it is technically taxable. However, of course, that taxable amount would be offset in full by the payment out to the employee. So there's a nil effect to all intents and purposes for tax purposes, but it does get treated as income. It does not get net off against the expense line. It gets shown in the income line. Now, a lot of people have said, what about VAT? What impact does that have? This is out with the scope of VAT. This is not relevant for VAT purposes. So you do not need to include this amount in your VAT returns, but it will be shown as other income in your other reporting, in your corporation tax return, in your annual accounts, or if you are a sole trader through your personal tax return as well. Thank you, Nicholas. I appreciate that. So that is what happens with our furlough treatment. Thank you everyone for tuning in. I can see a number of you tuning in. So I do appreciate that for everyone who is tuning in. Thank you. Hello. Please do remember and say hello to me in the comments. Hello, Charlotte. Hello, Buddy. Hello, Susie. Who have we got here? Hello, Josh. Hello, Morgan. Thank you everyone for hopping on and tuning in. I do appreciate that. So the next thing that I want to speak about is the bounce back loans. So the bounce back loans that were announced over the last couple of days for businesses to raise funding between £2,000 and £50,000. Supposed to be a very quick process, opening up on Monday the 2nd. It's expected funds will land in bank accounts between 24 and 48 hours after application. So that is the bounce back loan. They are designed for micro SMEs to obtain funding, to obtain loans at this point in time. I've also been asked questions around whether it is going to be allowed to be used for various things. Now, because the complete detail has not been announced yet, we can only guess a little bit at some of this stuff. I don't typically like to make big guesses, but we take some assumptions based on other stuff that we have seen. So people have said to me, are we likely to be allowed to use it for refinancing? So if we have other loans, business credit cards, that kind of thing, can we use it to this loan, the bounce back loan, to refinance those? Now, what I want to refer to here is we know that under the coronavirus business interruption loan scheme, the answer to that is no. You are not allowed to use it for refinancing. Many people have asked their banks for it for that reason, to refinance, to reduce their payments, to help them through this time. And the answer has been a categorical no, you cannot use it for refinancing. Therefore, we are assuming at the moment that the bounce back loan will probably be the same, that you probably will not be able to use it for refinancing. We don't know 100% at the moment, and we are unlikely to know until much closer to Monday, if not Monday itself. But that is what our gut is saying on that, because the coronavirus business interruption loan scheme, the CBILS, we are not allowed to use for refinancing purposes. So unlikely here. I've also had people say, well, can I use it to support my personal income because I'm not getting any personal money from the government if I am a small limited company owner who is unable to furlough? Difficult to say. There may be T's and C's in there that restrict that. What people have to remember is this is business lending. It's not personal lending. So the lending would be to your company. Now, whether you are then allowed to distribute a dividend, having had this lending, we don't know. Whether you are allowed to take it straight out as a director's loan, again, we don't know. Possibly is the answer on that. But if you have then a director's loan that you've taken out the business, there are tax implications on that. So bearing that in mind as well when you're trying to decide whether you want to take out a bounce back loan or not, whether it's the right thing for you, there are things that you need to keep in mind as well. So what else have we got next? If you have any questions as I'm going along, by the way, please ask in the comments. Please do ask in the comments. You are more than welcome to ask any questions you have at all. Hello, Rachel. Thank you for tuning in. Thank you for joining me. Please do ask any questions in the comments. I'm just going to check on those. Hello, Leon. Hello, Emily. Hello, Taylor. Let's see if we've got any questions coming through. I cannot see any here, and let's look on this screen. I can't see any on Instagram either. Do we have any questions coming through on Facebook? I don't think that we do just now, but thank you everyone for tuning in. Like I say, if you have any questions as we go, please do ask me, because I will answer as much as I possibly can as well. We've heard that 1 in 7 mortgages in the UK has been subject to a payment holiday now. Hello on TikTok. I just see you as user and then lots of numbers, but hello, it's lovely to see you. Hello, Alan. Thank you for joining me. 1 in 7 mortgages in the UK has been subject to a payment holiday now. That means the average mortgage lender has saved £755 a month in payments. That is what is being reported. So 1 in 7 mortgages subject to a payment holiday. Of course, this means that for the most part, people's payments will go up in the future after the holiday is over, because interest still accrues at this time. So if you are on a payment holiday, you may be finding that actually payments are higher after this because of the accrued interest. Hello, Maureen. Thank you so much for joining me. Wendy is asking the question on the bounce back loan, saying, will the amount up to 50K be determined on our last year's profits per accounts? Wendy, we're not 100% clear on the basis for this. In the eligibility criteria and the information that was released by the government, it says nothing about 25% of turnover, but anecdotally, a lot of people are speaking about 25% of turnover. That is what they're lending up to for the CBILS loans as well. So we can potentially assume that it may be up to 25% of turnover you would be eligible to claim. And we suspect it will probably go on the last year's filed accounts because there will be a cross-reference ability for HMRC on that. They may take management accounts. Again, we just don't know at this point in time. But if your year end has passed and you want to take advantage of these loans, but you've not submitted that year-end accounts yet, it's probably a good idea to get that done sooner rather than later, because if they do go on the last filed accounts, then you're going to want the most up-to-date information in there so that you can use that for the lending. I hope that answers your question, Wendy. A lot of it just now is we're not really sure, but we're going on some of the information that we know for the CBILS loans that already exist, those coronavirus business interruption loan scheme loans, to try and gauge what might be the case for these ones. So I hope that helps there, Wendy. I spoke a lot in the last 2 days about the banks and the issue the banks are having with the amount of lending and defaults that they're allowed to have in their books and what that means for future lending and those types of things. Barclays Bank are the latest to have posted large loan provisions for defaulting clients. So I spoke a couple of days ago about how it was likely that they might post losses overall for Q1 as well, which is going to be a problem ongoing for the banks, and in all honesty, then a knock-on effect for everyone else as well as a result. I'm just going to take a drink of my tea. Now, if you are getting value from what I share, I would massively appreciate if you want to share this video, share it out on whichever platform you are watching, to your followers, your likers, your connections, whatever they are called, on whichever platform you're watching. I would massively appreciate that. I also really do appreciate all the hearts, all the thumbs up, the likes, the loves, all those kinds of things, the waves, all those things I massively, massively appreciate. So thank you so much. Thank you so much for sharing. I can see some people sharing it as well. I do very much appreciate that. Wendy is saying it makes sense. If you have several companies that meet eligibility, can you apply for more than one loan? Again, when we assume so, these are business loans. These are for the business. They're not being assessed on the director. So therefore, we are assuming at the moment that if you have multiple businesses, multiple entities, then you should, we think, be able to apply it for multiple loans, one for each of those businesses. That is the general assumption we're going on at the moment. What else have we got? Oh, next, the retailer has said that fall in sales have been faster and steeper than they had stress tested. So many retailers will have done stress tests when they heard about coronavirus lockdowns happening in other countries to see what the impact might be on their business. This is kind of saying, okay, what's the worst case scenario that we might have here? And Next has said that their fall in sales has been faster and steeper than the stress tests that they had in place. So we don't know what that means for their longer term viability, or for many other retailers that are feeling the same as well, that are in the same position. But we can guess that is not going to be a happy story for them. Hey Ryan, thank you so much for tuning in. I do appreciate it. Hello Justin, thank you so much for tuning in. I really appreciate you guys joining me. We are also seeing that the Chancellor has said he's now ironing out the details for the bounce back loan. So I mentioned the bounce back loan a little minute ago. The banks actually were expecting the Chancellor to announce that funding was up to 25,000. And so they got a bit of a shock when he announced that it was up to 50,000. They are saying that they might have to change bits of the Consumer Credit Act in order to be able to get these loans out, but they are committed to getting them out. And this has been welcomed by many, many people. I know that some people are feeling, well, hang on, we are still being, for want of a better word, screwed over as a limited company director because everyone else gets funds for their individual personal spending, whereas the limited company director is unable to basically claim what they were taking out their business before, whereas employees can up to a cap and self-employed can up to a cap. Business owners cannot take out what they were taking out before up to a cap because of this dividend issue that exists. And many are saying, well, hang on, why are loans our only option? Remember, loans are the option for the business. Loans are for the financing of the business. They're not for the funding of the individual, for a person. They are for the funding of the entity. So there's a real difference here. They are for the funding of the entity. Dan, do ask a question if you have one. You're more than welcome to ask questions in the comments. So please do ask questions, Dan, if you have one. I am more than happy to receive questions in. So that's a really important distinction to make, that these loans are going to help many, many people. There are hundreds of thousands of people who have applied for the CBILS loans and are not getting anywhere. And this loan package will help those people. So it is incredibly positive. I understand if there are people who are still annoyed and there's still anger around the fact that they're not personally supported at this time. But this loan, it will help many, many people as well at the same time. We are hearing that councils are being criticised as well because nearly 40% of eligible firms for council grants are still awaiting funding at this point in time. The local councils received their funds a number of weeks ago now from central government, and to hear that 40% are still awaiting payouts is pretty tragic. In reality, it is a horrible, horrible position. There's a huge pressure on councils, and I mentioned yesterday that councils were saying their own funding, there's an issue because they are having a reduced revenue themselves and increased costs, and they have to administer these grants with perhaps a reduced number of employees at this point in time because they're off sick, those kinds of things, and increased pressure on them. So, we can understand that these are quite difficult for the councils to come out, but 40% still not being funded is a very, very dire situation for many. They're supposed to have millions in the bank. Dan is asking why are companies who have lots of money in the bank are able to apply for loans. That is how the loan system works. We don't have criteria which says if you have X amount of cash, you are unable to apply for this loan. What we imagine is that you may have to declare that you have some drop in revenue or some financial impact as a result of coronavirus, but you don't have to be down to your last penny in order to receive help, receive financial support, and receive lending. That is just part of the package at the moment. What else have we got here? We've got that only 13% of businesses have had success with the coronavirus business interruption loan scheme. The British Chamber of Commerce have said, which is of course why these bounce back loans have been so important, because there are many people that have applied for these loans and had not had success. So that is what these bounce back loans are supporting as well. Although 50% of businesses are saying that they actually don't intend to apply for loans over fears that they will be unable to repay them in the future. Remember, I've spoken a lot about loans being an incredibly strategic thing. If your business could not afford a loan before, it is not a good idea to take out a loan now. Making sure that you are thinking strategically about loans, even though there are no repayments for the first 12 months, there will be repayments at some future time. So making sure that you are able to work with your own cash flow to work out how you would be able to repay that, and if that is going to be a doable thing for you, because otherwise then you should not be taking out a loan. If you cannot figure out by working your own cash flow how to pay this back and start making the repayments in 12 months time, then a loan is a very, very bad idea for you. let's see what else we've got. Dan is saying the wage bill can be millions a week and they're saving that by furloughing staff. They are, Dan, but if a company has millions of pounds worth a week of payroll, they've probably got a vast amount of overheads, potentially in premises, in rates, in electricity, in insurance, in all areas. They've potentially got vast overheads, millions of pounds worth of overheads. So that's an important thing to remember as well. Caroline is saying, is this the new loan they are offering or the one from March? I'm speaking about, I was saying, Caroline, that about 13% of businesses have had success with the Sybil's loan, which is the old loan that they were offering from March. And we also spoke about the bounce back loan, which is the new loan that has been introduced, £2,000 to £50,000 worth of lending as well. So we've spoken about both there, Caroline. So I'm not sure exactly what bit your question relates to. So if you can let me know that in the comments, I can come back and answer that as well. What else have we got here that I want to cover today? Oh, yes, this is interesting. And whether or not it will affect us, of course, we don't know. But the Spanish authorities have called for remote working to continue for at least 2 months after lockdown has eased. Now, I can only imagine that at the moment we are looking at other countries and how they're lifting out of lockdown to understand what might be useful for us as a country. But if we're looking at some of these other things that are happening to business in other countries and saying that people should continue to remote work for at least 2 months, Iberdrola also said that they're going to have to drastically change their office layouts and those kinds of things to space out desks, have hand sanitizer available, masks available, only have 2 people in lifts at any one time, stagger the workforce so not everyone is in the office at the same time. We may expect that similar things might come into place in the UK as well. So this is important to think about if you are running an office-based business or even a factory or something like that, understanding actually what other countries are doing around bringing people back into central workspaces and what might need to happen, what adjustments might need to take place, and what you might need to be thinking about in terms of strategy and your contingency planning for that to happen as well. Gavin is saying that remote working has been a godsend and a curse. Yeah, it can be that for many people. I have been running a remote business for 10 years. So for us, we were very used to this. But for many businesses, it has been a double-edged sword, Gavin, absolutely. So I completely understand. That can be an issue for many people. What else have we got today? We've got that the UK support that is being offered will offset about a quarter of economic damage to households and businesses. We have seen the data come out, which said it has made a difference to the outlook and it has softened the immediate short-term hit to the economy. And there's over £70 billion worth being released to do that. But we are seeing that it's only supporting about a quarter of the economic damage. Now, many may feel that are listening to this, both in their households and in their business, that the support is not covering, as much economic damage as has been put on them as a result of this situation as well. We also, this was an interesting thing as well to note too, that temporary measures set during emergencies have a way of becoming permanent, have a way of sticking. So it's interesting to think about the temporary measures that are being put in place now and what might stick in the long term across all areas of our lives, in fact, because actually income tax was introduced into Britain to finance the fight against Napoleon. But of course, it has stayed for a very long time after that. And it was actually during World War I that it was decided the clock should change over summer. So, these things that have come in during emergency times have actually stuck the long run as well. So interesting to think about that when you're thinking about the measures that are being introduced now and which ones might potentially stick over a longer period of time as well. 2/5 of UK retailers have completely shut down now, we are hearing as well. And nearly 100% are experiencing cash flow difficulties at this time. If you're a retailer, you may very well be feeling that as well at the same time. Restaurants are asking and they are seeking for transitional support. I spoke a little bit about transitional support. I think it was yesterday in my session, but restaurants are seeking transitional support. They are saying that there's going to be fear that people will still not want to come to restaurants, bars, and clubs once we reopen, that people will still have a lot of fear about doing that, so they may not want to do that. And even if they do, having social distancing measures in place, tables spread apart, those kinds of things, is going to reduce the amount of covers that people can serve at any one point in time. The restaurant industry is suggesting that furlough support needs to continue for at least another 12 months, because if it does not, social distancing measures will bankrupt most pubs, clubs, and restaurants. I just can't see them wanting to extend furlough measures for 12 months. Now, they may do for certain industries, I suppose, but that seems an incredibly long period to me. And I'm struggling to see that the Chancellor would agree to that. I'm struggling to see how they could balance the budget on that one. But of course, we don't know what that looks like and what that might be. City AM are calling for a small business first exit strategy to help the UK economy recover. Small businesses have been, of course, many have been very, very hardly hit at the moment, feeling like they are able for less support than other businesses, small limited companies in particular, feeling like they have been able to obtain less help and support from the government. And therefore, City AM are calling for a small business first exit strategy so that small businesses can be the first to come out of lockdowns to help the UK economy recover. Whether or not we can recover is up to, a lot of people are putting their thoughts in there. Rishi has spoken a lot about bouncing back. He's even called those loans the bounce back loans. He's spoken a lot about bouncing back, but we've seen a lot of reports about a U-shaped deep and long recession. So it's difficult to know whether that will actually happen, whether that is likely. Let's see if I've got any more things that I did want to cover here. I've done this, spoken about this, and this. So I think I've covered everything on my notes now. Let me just check the comments to make sure make sure for questions. If you have any questions, do let me know in the comments. I want to make sure that I have answered any that people might have. Dan is saying, do we have any idea of what it will cost us in total and higher taxes next year? Dan, we don't have an idea of what might happen to taxes yet. The Treasury have said that they will, they're not going to make any decisions on that at this point in time. And even when they would be introduced, some people are saying they would not be introduced until the next tax year, which would be a year from now, pretty much. Other people have said there may be emergency budgets after this to introduce things sooner and get things passed in faster. So we really have no idea, but I think that we can expect increases in taxes. I think to expect anything else might be naive. Now, the problem is that increases in taxes don't go well with boosting an economy and getting people spending. That is going to be really challenging, is balancing those two things, because clearly taxes need to be raised so that we can claw back some of the financial support and get that for the running of the country, everything, the NHS, all those things. So we do need taxes to ultimately be raised to support all that. But in raising taxes, we reduce people's income, and that makes them less likely to go out and spend, and therefore more likely to stay in recession. So it's a really difficult balancing act, this. So we just don't know at all. You are welcome, Steve. That is no problem at all. You are more than welcome. Any other questions that anybody has? Anything else that anybody wants to ask? Please do so. Whilst I'm waiting for any questions to come through, I am back again. Same time, same place. So back here at 11 a.m. again. Tomorrow, a similar session, UK business and coronavirus. 11 a.m. tomorrow. I am back on TikTok, Instagram, YouTube, Periscope, Twitter, Facebook, and in the Uncover Wealth community, my private Facebook group. If you are not in there yet, please do come and join me. You can just search Uncover Wealth Community in the search bar on Facebook, or you can, if you're on some of the platforms, if you are on Periscope, Instagram, and TikTok, you can click the link in my bio. That will take you to a resources page, which has the links to the Uncover Wealth community. So please do join me in there as well. When I hear about breaking news around this stuff, that is where I release the information first. So do come in there. You can check it out. I also do an exclusive training in that group every Tuesday called Training Tuesday, where I'm covering something more in depth as well. So you can hop in there and join that exclusive training that happens in that group on a weekly basis as well. Let's see what else we have coming in terms of questions. Yeah, Dan is saying it's going to have a long-term effect on all markets. It will, Dan, it absolutely will. I'm saying the car market must be hurting. Yeah, absolutely. We're going to see widespread impact of this in many areas. It's gonna hit pretty much in all areas of business. Any more questions? I can't see any more coming in. So I am going to say goodbye. Thank you so much for joining me. As I say, I am back again 11 a.m. tomorrow. Pop it in your diary. Make sure you hop into wherever you are watching just now. You can do that, or you can come into the Uncover Wealth community and watch in there as well. I would love to have you in there if you are not in there already. It is a wonderful group that I love. I love facilitating. So please do come and join me in there. Yeah, absolutely, Dan. I will see you next time. Thanks again for tuning in, everyone. Until tomorrow, I'll speak to you soon. Take care.